Welcome back to Flex Candle, where we read the candles and flex the moves. I'm Flex, and today we're diving into a full top-down analysis on Bitcoin. We're going to start from the higher time frames, work our way down to the lower time frames, and check to see if we find any good setups. Now remember, this is not financial advice, and I'm not a financial advisor. Alright guys, so let's start off with the weekly chart. Currently, we have a green candle, which is bullish, but it seems to be like we're getting rejected here. We cannot get above 110,500 basically. We are still far away from the 21-day moving average. It's currently at 94,730. The price of Bitcoin as of right now at 3:30 p.m. Eastern time is at 107,784, and the stochastics look to start rolling over. So hopefully we could continue going sideways and we could flag out and then make our next move up. We take a look at the 3-day chart. The stochastics now look to start turning back up, so that's kind of bullish. We are above the 21-day moving average. The last 3-day candle, I believe, closed yesterday and it was bullish green, but again with a wick, which means that we're having some resistance here. So let's see how this candle closes in about 2 days. On the 2-day chart, the stochastics are on the way up as well. We did close a red candle, the last 2-day candle, and currently this one is red as well. It looks like we're making it towards the 21-day moving average at 105,127. Seems to have some support there. And here on the daily chart, the stochastics are now getting toppy. We could stay here for a little bit, and we are above the 21-day moving average. We just wicked off of it right there, which is at 106,668. We need to stay above this. If not, we're going to see more downside and possibly test the 50-day moving average, which is at 102,975, and that's not something that we want. We see here this is bullish. The 80-day moving average, this purple line, is crossing the 200-day moving average, the yellow line, as we can see here. So that's definitely giving me some bullish vibes. So hopefully we're going to continue going sideways. This right here is giving me a cup and handle vibe as well. So it's possible maybe we could break out from here, probably draw that pattern in a lower time frame. We take a look at the 22-hour chart. The stochastics seem to be going down. We did wick off the 21-day moving average so far. We still have like 2 hours and 25 minutes before this candle closes. So let's see what happens with that. On the 8-hour chart, stochastics are on the way down. We are though above the 21-day moving average. We're currently testing it, and this is the cup and handle here that kind of looks like it could play out. This will be the cup, and if we don't break below the 21-day moving average and this cup and handle does play out, this should take us to about 114,518. There's a lot of correlation with other patterns that take us there, so that is a possibility. I'm going to leave that there to see if it plays out. But if we break below the 21-day moving average and we can't make it back up, it's possible that this pattern will not come out. Now on the 4-hour chart, I originally made a falling wedge here, and then yesterday was giving me the vibes that it was more of a flag and this would have broken us out to 114,000, but I guess I was right the first time and this is a falling wedge. So I'm going to have to change this pattern again. That's how trading is. Depending on the information that you're getting, you have to make adjustments. And now the new measured move for this would be about 112,384. It correlates with this bigger falling wedge measured move here, which I originally had. So let's see how that plays out. But what's currently bearish right now is that we lost the 21-day moving average, guys. This is bearish, and it looks like we're going to go and test the 200-day moving average, which is currently at 106,024. You guys already know we already lost this first line of defense. We have all these moving averages scrunched up here together. If we lose the 200-day moving average, I have to get bearish again. The RSI though is pointing up, and so is the stochastic RSI, so maybe that could save us, but currently right now is not looking too bullish if we cannot get above the 21-day moving average on this 4-hour chart. We head over to the 1-hour chart. We see that the stochastics are toppy. We lost the 21-day moving average, we regained it, and then we lost it again. So the 200-day moving average is currently at 106,417. If we lose this, you guys already know, then it's the 2-hour 200-day moving average, the 3-hour 200-day moving average, and then the 4. We lose the 4, then unfortunately I have to get bearish again. But all in all, guys, I feel like I've been telling you guys we're going to be ranging between 103 and 110. We've been doing that so far. So as long as we don't fall below the 200-day moving average on the 4-hour chart for too long, I still see us being bullish. Let's see what ends up happening. Remember, this is the last line of defense right here. All right, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe, and if you have a stock or crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the moves. Catch you on the next chart.